We are looking and continuing our trip down 25 tax saving strategies. Our title of our topics are called More Money in Your Pocket, and this is the second strategy. Before we start into the strategy, I do want to give a little disclaimer. The information provided here is for general informational purposes only and does not constitute professional tax advice. Consult with a qualified tax professional before making any tax-related decisions. We're not responsible for any errors or omissions or any action taken based on this information. The information presented here represents the views and strategies of Raul Mendez of Valley Business Center. The second strategy I want you to consider is hire your own kids. According to IRS Publication 15, under family employees, the wages for the services of a child under 18 who works for their parent in a trade or business are not subject to Social Security and Medicare tax. So usually whenever you have a job and you're employed somewhere, you pay Social Security tax and you pay the Medicare tax. Social Security is 6.2% and the Medicare tax is 1.45%. The employee pays that and the employer also pays that second half. Well, when you hire your own kids under your own company, you're exempt from paying that. So up to the standard deduction. In 2023, the standard deduction for a single filer is $13,850. In 2024, it would be over $14,000. What that means that each child can earn up to $13,850. That was in 2023. Now we're in 2024, so it's higher. By using this as an example, and going back to our previous example with the person that was a couple with 3 kids, having 3 kids, you could hire them and they can make up to $13,850 in the past, in 2023, for a deduction of $41,550. Wouldn't it be crazy for you to take advantage of having a deduction of $41,550? Your kids can work with you by filing. A lot of us already have our kids working, cleaning in the office or working around the shop. They also come out in marketing, so you can pay for the marketing. There's so many different ways that your kids, and sometimes they're not little, sometimes they're babies, sometimes not, sometimes they're teenagers looking for that extra income, and you usually put them to work. I know I do. So imagine taking advantage of that deduction in a legal way, right? Where you keep track of what you pay them and you give them assignments and you take care of that. And then using that money to either fund a retirement account or buy their stuff that you already pay for, like tuition, like clothing, stuff like that. So imagine, so in using this same example that we used in the first point, you would get a $41,550 deduction, meaning that the person here, I don't remember his name, what I put the name as, he would pay in taxes $5,443. So it's a huge difference from going self-employed with a 1099 for $130K. So now having your own company and being an employee of your own company, and now adding the deduction of being having your kids work for you, that would mean a savings of $21,583 compared to treating all $130,000 as self-employment income. So the second option is to hire your kids. Some things to watch out for when you hire your kids: ensure the job is legitimate, define job roles and duties, ensure work is age appropriate, document the work, set a reasonable salary, check the fair market value, or at least pay minimum wage. Make sure you file the necessary forms. You don't have to submit a W-2, but it's good practice to keep it for your records. You don't have to send payroll data on them because they're going to be exempt from payroll taxes. And you can use the standard deduction. If you go above the standard deduction, then you do need to pay the payroll taxes. Make sure you document everything. Keep all employee and tax-related documentation. You can have a system to use payroll, like having a separate account. Now, it's very important. You cannot pay them through the S-Corp because S-Corps will be subject to payroll tax. So what you do is you can set up an LLC, like a company, a management company, and from there you would pay them. So you hire the company, you pay the company, and the company will pay them as employees. track hours and pay. Make sure you're keeping track of that. Make sure you keep track of direct deposits and checks, and make sure and comply with labor laws, so you can take advantage of that and save a ton of money. So instead of paying 20 some thousand, he only paid 5,443. Definitely a big difference in paying taxes. So strategy number 2, make sure and hire your kids for your own company as a tax deduction, and it will be great to work as a family.